Hello, everyone. Here, Chris Capri, Seconds Guys Trading. Welcome to the free webinar, first Friday of every month. We got a unique one here because not only do we have payrolls, but the announcement that President Trump has coronavirus, and that changes everything. Totally changes the calculus. Because I put coronavirus in my title, there has to be a CDC warning in my video here. That's funny. That is funny. Morning, everyone. Wow. Wow. Bombshell news. Well, there was kind of some suspecting of it yesterday. There was suspecting that, after Hope Hicks, his advisor, had gotten it, that there was a potential for him to get it since they were in close contact. He's got it. His wife's got it. The vice president has tested negative for it. But this creates a whole range of complications and scenarios that you have to prepare for. This is going to affect markets. And as we're seeing, ES is down. It was down 55 points. Markets are just red across the board. The only thing that is up is VIX, which I just bought VIX protection at the open. Europe was down, obviously, in the news. Asia didn't find out the news till late, but they were down for the ones that were still open. But Europe got hammered, and that was just leading into everything going with this. So expect markets to be under pressure now. This changes the calculus because we don't know. He's in the at-risk category. He's over 70 years of age. He is, based on his body mass index, he's probably in the slightly obese category for sure. And so he is someone who has higher risk than just the average person getting it. So there's a lot of complications to cover on all this here. And we're going to talk about all the different scenarios and how you can trade it, how I've positioned myself. Let's see what's happening with my DKNG. Okay, good. They're popping. So, there's a lot of ways that this can be played, and there's a lot of effects that it's going to have. Obviously, markets are under pressure. So hello to you, Lucas. Good to see you. And looks like people are slowly joining in. So very nice. Okay. So first thing I want to talk about, for these first Friday of every month, we do free YouTube webinars, and sometimes we do extra ones on Fridays, so sometimes we do extra weeks throughout the month. But the way this is we're going to share with you some analysis of the markets, some trade ideas, trades that I'm in right now, trades that I'm thinking of taking or adding or adjusting or anything like that. Some of the major trades that I've taken this week, and then we'll do analysis of potential trades. So if you have trade ideas that you are, want analysis on, hey, what do you think about this? What do you think about this? The rules are very simple. Instrument, you got to list the instrument, the time frame that you want the analysis, one sentence description, you're bullish or bearish, why. And if you have a trade, you share the details. Other than that, that's pretty much it. So let's go ahead and begin. So let's start with markets first. We'll start with indices, then we'll get into VIX. We'll get into we will get into currency pairs. I am expecting futures. I'm expecting S&P and QQQs to be down, to stay down the rest of the day. The chances that some positive news, coming out, in terms of Trump's condition, seems slim. So, with that being said, since I think there's a slim chance that anything positive is going to come out of that, you have to expect that there's going to be a risk off on this. The other thing about it is that the other important thing to understand is that, hold on, just making sure everything's good set up there. Okay, cool. The other thing you have to understand is that he's already shown conditions of mild effects. It wasn't just like, oh, I have coronavirus and I'm self-quarantining. He has coronavirus and he's showing some of the mild conditions. He's looking fatigued. There is suspicion that he's already showing some sort of cough or something like that. So, that is going to have an effect on it, that the first day within 24 hours announcing the coronavirus, he's already showing physical signs of not being good. That's going to put risk off into the markets. So I'm expecting indices to be down. The ones I'm really expecting to be down is going to be tech. There's kind of a double whammy happening in tech right now. First off, tech was the strongest index because of the NASDAQ whale and everything that happened. That started to unwind when the NASDAQ whale unwound their position middle end of August. Hence, you had the big sell-off. But tech is going to be under double pressure because not only is all indices going to be under pressure right now, but then on top of it, the big tech names are being brought before Congress again in relationship to, hey, you're censoring the internet, you're affecting the internet, you're gating the internet to some degree, and we have an election coming up. And so there's going to be a lot of questions that are going to be brought before Congress, and that's going to bring up a lot of questions. So I expect tech to be under pressure. The other thing, obviously, is VIX. Having some sort of VIX protection right now would be highly recommended, in my opinion. I just bought some VIX protection. So I bought a VIX bull call spread, which is a debit spread. So I bought the 30-35. So I bought the 30 and I sold the 35. So I get max profit if it closes above at 35 or higher. The expiry is December. And the reason why I chose that is because not only does this accelerate that situation, but then on top of it, you have the election in the US, which is going to be a contested election. The chances that there's going to be a winner declared on the day of the election, November 3rd, seems like slim to none at this point. I would say there's less than a 1% chance that the winner is going to be decided on that night. You're going to have mail-in ballots and things like that. They're going to need to be counted. So, with that being said, a lot of states have regulations that they have to decide the winner in their state by X date. And so that's why I chose the December expiry. I think you should expect to see election chaos and election issues going on through all of November and probably most of December, possibly even the end of the year. So very, very interesting situation, and thus a situation you want some VIX protection, in my opinion. Okay, so we got some people. Let's see, B3 and hi. Hello to you, B3. Hello, Robbie. Gabriel saying, does this risk-off reaction to the news mean that the market was pricing in a Trump win? No, I don't think so. Most of the betting markets have been pricing in actually a Biden win. But it changes it because you got to understand that now all of a sudden there's the chances that the next debate is going to happen is slim. It's supposed to be in like 12 or 13 days. The chances that that debate's going to happen now changes the calculus of it. It's unlikely. On top of it, Joe Biden's going to have to get tested. His wife's going to have to get tested. I would say he's a little bit more frail position physically than, say Donald Trump, but Donald Trump is more obese. So he has that issue. But it just creates so much uncertainty. Even though the vice president and his wife have tested negative, they're going to have to get tested over and over again over the next several days. Plus, Trump was at a fundraising event like the day before, that his advisor got tested positive. So I don't think that they're pricing in a Trump win. Predicted Markets has been pricing in a Biden win. Now that's kind of going even stronger in his favor. And so, yeah, I don't expect that. I think the risk off is just a natural reaction to the situation. That's to be expected. I mean, think about it. If, the president, has it and the conditions worsen, all kinds of questions comes up. Potential transition of power during an election. I mean, there's a lot of messy stuff here. So I was already expecting, even without this, I was already expecting a very volatile 6 to 8 weeks ahead, where the markets are probably going to be very skittish on any news. It could jump high or any news it could jump low kind of thing. But now we are talking a situation where the complexity just goes up to a whole new level. So Anthonyus is just like, I don't care. I want to get straight into the charts. Before we get into Anthonyus, we're going to do some potential analysis here. So VIX is the first thing I think you need to be looking at that helps you get some sort of upside protection, basically, or downside protection in the markets. Being the volatility index, if volatility is going to increase through the election, then being long VIX is a potential option. You could be long the underlying. You could take long via, options if you wanted to, which I have. So I'm long VIX via options right now. I have a 30-35 call spread on it, which is a vertical spread. So DDOG, we'll get back to you in a little bit. Jim Ramon, what's up? It's up to you. Okay, looks like I've answered a question there. Good morning to you, Justin. Good to see you as well. Okay. So yeah, I would suggest looking at VIX protection. Remember, VIX can shoot really far, really fast, and then it tends to retrace. So just keep your eye on VIX on here. I like options, but you can do, if you have CFD provider, then you could do the underlying on that. Hold on, you're gonna hear a bunch of beeps for a second here. Sorry about that. TradingView has a weird thing that if you have a beep on one chart, it'll beep on all the tabs. I really wish it wouldn't do that. That's a really annoying feature. And Nova Bay Pharmaceuticals is a mass provider. You can suspect now with the president kind of, now that he has it, you got to understand he's been kind of a champion of downplaying it and the effectiveness of it and masks and things like that. And so if he's been someone who's been downplaying and things like that, masks are going to be a big thing now. So Nova Bay Pharmaceuticals is one of the mask makers, and so that I think has a positive potential for them. Yeah, they have to fix that. Yeah. Oh, yeah, the TradingView thing. Yeah, they have to fix that for sure. They definitely have to fix that. It's so weird. I don't know why they work on so many things, but then some of the things they do not work on. Precious metals, you could make some plays in precious metals. The US dollar is going to be a tricky one. Initially, the US dollar, there it is again. The US dollar sold off. Originally, USD has been sold off, and then now USD is kind of fading some of that. You're not seeing a huge reaction though in the currency markets. Currency markets aren't going gangbusters from it. I mean, there's some decent movement, but nothing too crazy. So yeah, this is 30 pip movements, and since the announcement, 40 pip ranges. Currency markets have not gone gangbusters right now. I think stocks is where you're going to see the biggest movement. So that I think you have to watch for. But one would think the US dollar, it's tricky because being a risk off event, US dollar should gain, but then again, it's in the US, so that has an effect. Swiss franc probably is a better play, or Japanese yen might be a better play on this one here, but currency markets don't seem to be reacting too much. It's mostly stocks at this point, which are trying to rally some of the overnight losses and things like that. So in terms of S&P, let's go to SPY. I think the areas you want to watch for is, this is your most important resistance right now. You got like a short-term resistance right here, this right here. Let's go full screen. So this right here, being that, we had a nice launch, then a sell-off from the risk on event. This is going to be the first important test for SPY, 338. And then here you have this double top, which is going to be very important here, because you have the impulsive sell-off when the NASDAQ whale started to unwind their position. Then it formed a large corrective structure, double top, triple top, quadruple, sells off, makes new lows. So by making new lows, then clearly if the market gets back here, that is going to be defended. So you have to suspect that somebody's going to be defending 341, 342. So watch for 342 as potential plays here. There might be a good selling opportunity here. Keep an eye on that for sure. But yeah, I like 342 a little bit better. This is more of a short-term level here. I'll put an alert here just to give myself a head. If it gets above that, then clearly the calculus changes on the structure. So if we get above 343.22, then this might act as a floor for the next launch up. And it will also have unwound a lot of this structure. So, impulsive, then the, hey, no, get out of here. Then the corrective structure. So the impulsive structure, it's already transitioned a little bit by pressing back into this, finding a floor, and now we're back into this. So there is a little bit of unwinding in this structure, but the structure will be fully unwound if we get, say a 1 hour or 4 hour close above 343.09. If we do that, that changes the whole structure. And so that means that people are betting on a recovery in the markets for whatever reason. So okay, so that's SPY. I've already talked about VIX. I feel like being long anywhere between 25 and 29 is fine. If you get a break above 37, then there's a quick chance that it can shoot up to 35 really fast. The thing about VIX is it can reprice really, really fast. That's what you have to understand about VIX. And, just like just like fire insurance, in winter fire insurance is cheap, in summer fire insurance is more expensive in California. VIX is kind of like fire insurance, that if the market starts to sell and there's a huge risk off, VIX becomes more expensive really, really fast. And it doesn't take much. It only takes a few percent decline in the markets to start forcing liquidations, because the markets are mostly pretty levered to the upside. QQQs, what I like in this one, so I'm short QQQs via call spread. Let's go to full screen. I've talked about this one before. So I have a bear call spread. I have a 282, 287. So in this case, I sold the 282, I bought the 287. And so as long as the market closes below the 282 by the time of expiration, which is the October 16 expiry, then we have, wow, that was weird. My YouTube glitched for a second. As long as it closes below 282, then I keep the full credit, basically. So this is kind of nice. We had, the market's building up to it, and then we've had a little bit of risk off that kind of helped. So good timing that it did it right around here. So I want this thing basically to be below 282 by, the 16th, which is 2 weeks from now. So as long as that happens, then I am in good shape. Okay. If you don't have if you don't have any QQQ position, this is your main level to watch. This kind of resistance right here. 282, 283, high 282s, 283 flat. That's your main level. It's kind of that same structure we talked about in the SPY, that if we get below this, because we have the impulsive corrective structure and then impulsive selling, double bottom. So now clearly there's resistance here. If the market breaks above it, closes above it, then you're going to see some people that were short here that are going to unwind their positions. That will technically create a situation where the market can start flipping more along. It'll also mean that they've taken out some of the medium-term resistance. So this is kind of your main level to watch on the upside, and 261 is your main level to watch on the downside. You could drift a little bit lower because there was one spike here. You could push that down to 260 if you want, but that's your main play on that one here. Okay, we got some questions. I got a question from Robbie. He's saying, hey, since USD can be tricky, the same would be true for gold. Yeah, and you're seeing that in gold already. You're already seeing that in gold. So, gold gold is kind of having mixed reactions. One would think that gold would probably gain as a whole from it, but it's just kind of chopping around. I think this is when the news kind of came out, and then, or at least the first hints of that. And now it's off a little bit, but currency markets do not seem to be having a huge reaction from this. So, yeah, right now I'm kind of hesitant to take any plays in the currency market right now because I'm not seeing any outsized reactions. So, yeah, it's Friday. That could be something to do with it, but yeah, I would think there'd be a stronger reaction from the currency market. We're not seeing that right now. So, yes, good question on gold on that there, Robbie. I think that's pretty much most of the plays on this one right here. I have long precious metals exposure. I have SLV, I have XME, I have GDX, which is Gold Miners Index. So I have precious metals exposure. I like having precious metals exposure for the medium term right now. I don't see any reason to unwind that. There's so many situations that are favorable for precious metals. There are many scenarios I can envision where the USD loses value, which would boost gold, which would boost silver. There's a lot of larger players that are accumulating gold. Gold also structurally, in my opinion, has kind of a new base in play. Once gold started to make these recent structural highs, so this was kind of the corrective structure that gold was in for a while. So there's the parabolic self at 11, or the parabolic movement 11, the big sell-off, the basing recovery. Now that it's broken out of this structure, gold has a much higher base. Before, wow, thing froze for a second there. Did you guys have that? That was weird. anyways, as I was saying before, the base in gold, I think, was between 1073 and say 1161. But now I think the base in gold, it has to be higher. So that I think just creates a structural environment where gold will continue to push to the upside. So I don't think this run is over. It's definitely been an impressive run. It's 2 years in the making, but I don't think this run is over. I think gold's going to continue to find a good base of support. Potential areas of base of support for gold, I think, are 1790 because you got this triple top here, top of this corrective structure, which you draw like this. So that is a potential base there. I think there's definitely some meat around 1700. And then, 1460, 1500, 1550, I think those are all solid bases. But this is the first time we've tested the weekly 20 EMA since March. And the market has had a very nice bounce off of it. And so that's very positive. It needs to get a little bit higher to show that, hey, this isn't just a one-time bounce off the weekly 20 EMA, but it wasn't just a few dip buyers coming in. There's a lot more happening here. So I think if it can get back up here, then I think that's really, really favorable for gold. Reddy, good to see you. Hi, Chris. There may be many gaps on Monday because of President Trump. I mean, it's already starting. You're already starting to see effects in the markets right now. So will there be gaps on Monday? Possibly. It would depend upon what kind of news comes out. So if there is new developments, his condition worsens or his condition gets significantly better. He was showing some symptoms. So if the symptoms get worse, obviously that'll be more risk off. If his symptoms get better, that will change it interesting. But if you think about it, there's certain things now that we can't change. We can't change the fact that the next debate is probably going to be off. I'm sure some people are happy about that. I personally thought it was a shit show. Excuse my language. But that is going to change the calculus of everything. He's also not going to be able to do rallies. If you think about it, there's no way he can do rallies for at least the next 2 weeks. You're talking, we are less than a month away, or about a month away, November 3rd. So he can't do rallies at one of the most critical time in his campaign. And so, it's possible that he is not able to do any sort of rallies till through the election. And that's going to have a drastic impact, obviously. If his condition gets worse, then are some Trump voters going to move away from Trump because they're worried that his condition's so bad that electing him president means you'd be voting for somebody who's going to be sick and potentially, unhealthy or dying kind of thing. That there's so many changes in the calculation here that, it's kind of one of those you have to wait and see a little bit. But at the same time, that doesn't mean you don't have trades you can make. I personally think the best thing you can be doing right now is getting some sort of protection. If you have mostly long exposure, you need to get some protection to the downside. And you can protect your positions directly, or you can buy alternate protection via VIX or however you want to play it. One potential play you can even consider is that, because there's a lot of now conspiracy theories coming out. Get out your tinfoil hats, people, because there's all kinds of conspiracy theories that people were saying that somebody deliberately infected him so that he wouldn't win the election. And it's like, I seriously doubt that, because, he already has so much protection. Secret Service are probably screening everybody he meets right now. So there's, in a situation like this, especially where you're going to create a vacuum of power where the leader of the country is going to be less visible, it just creates more uncertainty. It creates more chaos. So how do you trade uncertainty? You do it through getting protection. You do it through getting VIX. VIX is specifically for something like this. So that is how you play this. I think we need to see more reactions in the currency market before you can make currency plays on this. But yeah, so this is going to be a very fluid situation. There's probably going to be a lot of rapid developments between now and Monday. And so, I wouldn't be too heavily positioned. I would reduce positioning. If you're someone who has a lot of long exposure to stocks or indices, I would be reducing exposure as much as possible. You want to be de-levering, especially if you've been levered up pretty heavy. You want to be de-levering a little bit and you definitely want to protect that. You can protect your positions with options. You can get other forms of protection, but you definitely want to do that. Being less visible may help. There's certainly some truth to that. That is definitely a possibility. Sometimes Trump is, his own worst enemy. And so it's certainly possible that not being visible can help in certain situations. So just depends. But overall, being less visible, while it may reduce some of Trump's downside characteristics, the bottom line is he's not able to campaign. The bottom line is he's not able to rally. That may be for the rest of the campaign. The bottom line is he's not going to be able to debate. Maybe there might be no more debates. There might be no more debates. And so, in some sense, that could be a good thing for the American public. I personally do not need to see any more debates. That was really painful to watch that. And so, yeah, so that's where we're at right now. Okay. So we have some questions on trade setup. Antonius, I hope I'm saying your name right, Antonius Criswanto. You want to look at gold. You want to look at the daily. So remember, if you have instruments you want me to look at, 3 things: instrument, you got to give the symbol, time frame, 1-sentence description, bullish or bearish. And if you have trade details, you got to share that as well. Okay, let's go to daily. Daily midterm bearish, short at 1906. Yeah, I see what you're thinking here. You're thinking that there was a relative floor here. So there's the big sell-off. There's a floor bounce, weaker bounce, breakthrough. Now we're at this again. I don't like taking a position in gold right now because there's too many scenarios that could be risk to the downside, and there's too many scenarios that can be risk to the upside. I wouldn't want to take a position in spot. If I had to choose, I'd probably take a position via options right now. Gold options are probably pretty cheap right now. So I would rather take a position via options. But I see what you're saying. If somebody wanted to be short, this is not a bad level to be short. You had stop loss 26. Do you need a 26 stop loss? I actually see the intelligence of this. So let's dive into this a little bit. Let's blow up the structure a little bit. So you're feeling you want to get short here because you feel that this support might become resistance now. It was support for this corrective structure. The bounces got weaker. Very strong, medium, weak, breakthrough. That's generally how those things work. When the bounces get weaker, usually you see a breakdown. There is a confluence of resistance here. So you have this floor here from this level. You have the 20 EMA in this case. There's a nice confluence here. Let me look at, is there anything on... Short term, it's bullish. So you had the breakdown, you have the sell-off, profit taking, second attempt, struggles to make a new low, and then you have impulsive buying. So that's not only the bears that were short here taking profit, but new bulls are coming in, because taking profit in and of itself wouldn't produce such a large reaction like that. It's unlikely. And it's continually being rebought. It's being rebought at the 20 EMA. So short term, this looks bullish. The structure, this bounce, impulsive bounce, holding the 20 EMA up, looks bullish. I see why you chose your stop loss here, because it gives you a little bit more buffer from these wicks. Like maybe the market will penetrate into here, something like that. It's not bad. I think short term you are trading against some momentum, and you're also trading into a weekend. So trading into a weekend, not my favorite, because there's a lot of event risk that can happen this weekend. And so that event risk, creates a lot of potential situations where this could jump wildly. So I wouldn't necessarily want to hold a spot position like this going into the weekend. I think if you have the potential to play this via options, I would consider that. But I'm not a fan of this from a short-term perspective, and also the potential event risk on this weekend. So that's my thoughts on that. Okay, we got some questions here. Sometimes it's easier for me to look at the questions here. Trump or Biden getting the coronavirus was a known quantity, in my opinion. Sure, it was always a potential. Both high risk age bracket out there shaking hands with strangers daily. Non-event in my opinion. Them getting coronavirus in and of itself is an automatic risk off. I mean, we're seeing that. It's very clear. We're seeing that. The markets had a very, the S&P was down 50 something points pre-market. So clearly the markets are disagreeing with you on this one here. Risk off environment was tipping its hand last couple of weeks before the news event. Sure, it was already in play. There was already a lot of potential risk off environments in play, but now the calculus becomes more complex. Let's just look at some of the variable scenarios. So Trump has it, his wife has it. So Trump's condition could get worse. What does that start to do to things? He could potentially, die. That's a very serious thing. So that has major complications. Like when was the last time a US president died while in office? You're talking a long time ago. So that changes the calculation. His condition changing in any direction, negative or positive, affects the calculus very seriously. There are other members around him that could get infected, that could get unhealthy. That's a problem. Oh, wow. I'm getting a weird. They're saying my bit rate. That's interesting. Huh. The stream's current bit rate is low, which is weird because I have fiber here. What the F? All right, we'll talk about that in a little bit. We will definitely have something to say about that in a little bit. So anyways, there's family members that could get sick. Ivanka, they've tested negative, but maybe they test positive. There's all kinds of things that could happen here. Other political leaders could be affected by this, donors. But then let's look at the other things. So you have the scenario of Trump's condition getting worse, Trump's condition getting better. The bottom line is there's no campaigning for the next couple weeks. There's no debates. We don't know his condition other than he's showing signs of fatigue. He's showing mild symptoms right now. That's going to have pressure. And you might have a president that is going through an election and he can't campaign and he might be too sick. So what does that do? That's going to shake up things. So to say that this is a non-event, in my opinion, I can't totally agree with that. I cannot totally agree with that. There's so many different calculations there. Also, what if Joe Biden's got it and his health starts to deteriorate? What happens if Joe Biden gets so sick that he can no longer campaign? He can no longer be considered a candidate for president. Then what? Do they have to nominate somebody else? Like the process, the possible scenarios here of how things can play out is immense. It's immense. So I don't totally agree with the idea that it's a non-event. I do agree that risk off was already building into the markets, but I can't totally agree with that sentiment. So that's just my thoughts on this. All right. Next question here. Justin Given wants to look at CAD yen. Okay, so what time frame do you want to look at? The 4 hour or the 1 hour, Justin? You got to pick a time frame. Long at 79.13, stop loss 22 pips, take profit 79.80. I service a breakout structure on the 4 hour and the 1 hour. Really? Not totally seeing that. Maybe you're thinking this. The 4 hour. You want the 4 hour. Is this the structure you're thinking of? Yeah, let me know. Okay. So first off, yeah, you're talking a breakout though, but you're talking a breakout that's counter trend. So where has been the trend? The trend has been down lately. And so it formed a mini breakout structure here, breaks lower, but then it finds support, starts to build. It does breakout, pullback, but it's counter trend and it's sold back off into it. So while there is a higher low, that does help the bullish case to some degree. Long at 79.13. I see what you're saying. If you go long in this breakout pullback, I see that. Where's your stop loss? 79.13. If you just got long, if you had a 22 pip stop loss, you would have gone stopped out already, because that's already dipped 38 pips. So maybe you have re-entered again. I don't quite understand the 22 pip stop. Let's see, 11 plus 13, 24. I could see it. I could see below this wick here. I could see below this wick here, because that's where the most recent impulsive move for the last 2 hours is. But the fact that the market sold off pretty aggressively, this is kind of a mixed trade. It's not my favorite because the order flow on both sides is mixed. You have the bear trend, so downside pressure in the order flow. You have the breakout of the corrective structure at the bottom, which is short-term bullish, but it's counter trend. It made some new structural highs bullish, but then it sold off really aggressively. 2 hours erased 20, maybe 30 hours of buying. So that is bearish. And then now it's producing a higher low bullish. It's a lot of mix. It's not my favorite. It's not my favorite. And the location's not totally my favorite. Like if I wanted to be long, I would probably wait to be long more towards the bottom here, because then you can have a really tight stop. You have a lot of upside. You have a clear rejection of an area. So it's okay. There's some things there, but it's a lot of mixed material in my opinion. I hope that makes sense. I set my stop loss to break and got hit this morning. Price is still hanging around. What do you think? Okay. So hopefully I've answered that there. Robbie, you're welcome on that. Tom Sermon, hello from Germany. Hello to you. Supreme Court nominee and her family. There you go. That's an interesting situation because he recently shook hands with her. Yeah, it depends on when he got it. It depends on when he got it and who is he connecting with at that time. So all very important. YSSJC, hello to you. Good to see you. Antonius, you're welcome for that. On the analysis, YSSJC says, what is your view on systematic trading back testing? Are you asking two questions there? Like, what's my view on systematic trading? What's my view on back testing? Let's see here. Which is better, algorithmic, systematic, quantitative, or discretionary? There's no one that's better or worse. They all have their upsides and downsides. There's no perfect system out there. It doesn't exist. There is no such thing as perfection in the markets. It does not exist. So it's not a question of which is better. It's a question of which is better for you. There are certain areas where algorithmic and systematic can be better. But the thing is, with algorithmic, you have to tweak those algorithms every 12 to 18 months. So, the average lifespan of an algorithmic system with a hedge fund is 12 to 18 months at best. So that means you're constantly on a hunt for a new algorithmic system. There's no algorithmic system that is staying exactly the same for years and years and years on end. It's just going to lose its edge over time. So that is one of the downsides of algorithmic. Systematic, it depends if you're fully rule-based or you're discretionary rule-based. So it depends on how systematic you are, but it's the same thing. Quantitative, algorithmic, systematic, they all have the same strengths and weaknesses for the most part. I prefer discretionary rule-based. The reason why I do that is because I prefer to have a set of skills that I can adapt to the environments and that I don't have to constantly retweak. Like the skills that I have now are just as useful as they were 10 years ago. My price action skills now are just as useful as they were 10 years ago. They would have been just as useful 100 years ago. It doesn't matter. Think of it like this. If you are let's just say you are a football coach. Well, do you always use the same formation for your players on the field based on all the different teams and environments you're facing in? No, you change it. You change it based on what kind of environment, what kind of adversaries you are facing in the environment. But the conditions, the skills are still the same. Dribbling still the same. Trapping still the same. Passing still the same. Cutting off, creating angles in certain runs are still the same skills. So I prefer discretionary rule-based. I think there are certain times where using algorithms or using, coding to help you get into positions or to manage risk or to get out of positions or just to even scan for potential trades. I think you should use technology when and where you can. But for me, I prefer discretionary rule-based trading because it allows me to adapt to environments. I don't have to recreate an algorithm every 12 to 18 months. And while I'm recreating an algorithm and my other one's no longer working, I have Now I'm stuck. I have no algorithm to attack the markets. That's a problem. So, and I'm constantly having to redevelop algorithms. I don't want to have to do that. That just seems like a lot of time wasted. And it's not how I naturally align my thinking. I'm not naturally a quantitative type guy. I do have certain things that I approach the markets in a quantitative perspective, particularly when it comes to analytics. But as a whole, I am much more aligned with a discretionary rule-based system where I have skills that I can rely upon in any instrument, any environment, any market, doesn't matter. So that's my approach. Hopefully I answer your question. In terms of back testing, I think it's great for discovery. I do not think it's a golden way to test something, whether a strategy is going to be profitable in the future. It's just testing the past. It's not forward testing. You have to do forward testing. So hopefully that answers your question. Okay, how are we doing on time? Okay, we got about 13 more minutes. So if you have some instruments you want me to analyze super quick, let me know. We got about 13 minutes and then I will wrap this up. Let me see what's going on with S&P. So S&P is regaining some of the losses, not huge, but some of it. It's struggling at the weekly 20 MA and resistance. You can see the resistance here. So, and the weekly VWAP, sorry, not weekly 20 MA, weekly VWAP. What's going on with QQQs? QQQs is rallying a little bit. Volume fading though. So yeah, if it gets back below 278, then it should test the VWAP. And if it gets back below VWAP, then it should test the prior lows around 275. So a new ETF you want to keep an eye out for, SPAC. Anybody know what SPAC is? SPAC is an ETF for the SPAC, special purpose acquisition vehicles, basically. So SPACs have been a very popular alternative for companies to IPO. And so you're seeing a lot of these blank check companies pop up more and more. And now somebody has created an ETF for that. So keep an eye on this. I think right now one of its strongest holdings is DraftKings, which is my baby. DraftKings is just killing it. Man, I wish I should have bought some more. I don't know why I didn't buy any more. Dear God, look at that. Look at that. What the hell? How did I miss that? Oh, right. I was doing a webinar. Mother effer. Look at that. So look at that. Okay, so we pull back right to prior RRL resistance. I have no idea how I missed that. I have no idea. Anyways, I've been long since 26. I've been adding all along the way in DKNG. I added, my most recent ad was at 58, 70 or 80 or something like that, which was this. Which day was that? Yeah, this was the structure. So this was the last ad. Was when we broke this towards the end of the day. I had a 58.27. So now we're at 62, but how the hell did I miss that? I have no idea. All right, I'm putting an alert there. If it gets down to 59, I will be a buyer. Unfortunately, not allowed to trade US ETF in Europe. I think you can with some brokers. It just depends on the broker. Sasha maybe can confirm that, but depending upon where you are in the country, Thinkorswim does allow some European clients. There was another broker though, Zacks Trade. They allow, I think, European clients. So check on Zacks Trade as a potential option there. They do permit some European countries and clients. So definitely something to check out where you can trade some ETFs. But DKNG, super, super strong, building a nice corrective structure. As long as sports continue, DKNG is going to continue to do really, really well. Two things you should never bet against: people's passion for sports, people's passion to gamble. You put that together in one stock, that is something you do not want to bet against. So that's why I've been super long DraftKings. I've been long since 26 and making a ton of profit along the way. This has just been by far the number one stock for me all year in terms of profits. I have made more money off this stock than like any other three stocks combined. It's not even close. It is not even close. I've made a boatload of money off this right now. Yeah, just gangbusters. So if DKNG, now that it's in a wide corrective structure, I would probably wait for a breakout pullback on this one here because we're not building. it's not like we're squeezing a whole lot of pressure. It's just kind of rushing up off the lows. So I'll set an alert to see if it gets above here. Tom, sorry, I never bet against Michael Jordan. I wouldn't either. It's definitely not something I'm gonna bet against. Have you seen that movie, The Last Dance? You should. The not the movie, the series, The Last Dance. Watch that series. He was an insane competitor. Thanks, Chris. I'm in the right track. Rule-based description. I have another question. Sure, fire your question. You got about 9 minutes before we wrap this up, because then I need a short break before member webinar at 8 o'clock. Let's see what's going on with VIX. VIX is just sitting right where it is. So it gapped up and then it's just sitting there. It's very interesting. That'll be very interesting to see. Silver, nice. Tesla building short term. I know they had some positive news on deliveries. They had a very strong quarter in terms of deliveries. So yeah, Tesla is maintaining, or it's at least holding a fair amount of its gains right now. And SPACs there. How's Qs? Qs is slowly building. Sasha's saying, I know UK clients are not allowed to trade US ETFs. Really? But I'm able to trade them via my Swedish broker, so not sure it's an EU limitation, but rather a country by country one. Okay, gotcha on that. Jai Manga. Long Aussie dollar. What on H4? Okay, let's take a look. Long Aussie dollar H4. 702. It's a darn good entry. It's a darn good entry. I like your entry. I already had a line right around there. It's a very good entry. Stop loss 69.55. I don't even know if you need that big a stop loss at this point. It's already bounced 140 pips. Like at this point, let's see, what's your target? 725. So you have a 230 pips target. You are now up 140 pips. So you are, let me pull out the, you have 230, you have a you have 230 target, 140 divided by 230. Yeah, you're 60% towards your goal. I don't see any reason, and you have another 90 pips left. So here's, you haven't adjusted your stop loss yet, Jai? Maybe you're doing set and forget. If you're doing set and forget and it's part of your plan, you have to stick to that. You have to commit to your trading plan. Like if that's your trading plan, you have to commit to that. But if it's within your trading plan that you can manage trades, well, then look at the math. You have 90 pips upside, but your risk with your stop loss at 69.55, 45, 65. So you have your original risk of 65 pips plus you're up 140. So you're basically now have 200 pips of risk for potential 90 more. Does that math make sense to you? You're risking 200 to gain another 90. If you're doing set and forget, then you should stick to it. But if you're managing it, does that risk make sense? Risking 200 for 90 more. That doesn't make much sense. So if trade management, in other words, you can adjust your stop losses, is within your trade plan, then I think you personally should be adjusting your trade plan. I don't think there's any reason why you should be losing money at this point if you have trade management within your plan. And so, yeah, I don't think there's any reason why you should be losing money at this point if you can move your stop loss, if that's within your trade plan. So, yeah, that's my thoughts. Very good entry. Very, very good entry. You were like 9 pips below my trade location on it. So very nicely done on that. It's a very good entry. I don't think you need that. But let's see. Where'd you put your stop loss? 69.55. I think you could have, I think your stop loss is pretty darn good. I think you could have gone 60 if you wanted to, which, it's not much, but every amount helps. You could have gone 71. If you got in on this and then it did that and then bounced, I would have immediately, as soon as you got like around here, I would have immediately brought it up to right below this double bottom low. That would have been my trade adjustment Like that's just standard thinking basically. So yeah, thanks. Set and forget. Okay, you're doing set and forget. Gotcha. Okay, then you have to stick to your trading plan at this point. So yeah, very, very nice entry. Nicely done on that. Your target is 72.5. I think it's a little high in the sense of, so what do you have? 45, 65 target. You have 65 stop loss, and you have a 240, you have 230 upside. So it's almost a 4R. I think your target's a little bit high. Reason being is you have these peaks to contend with here. You can't ignore these peaks. You can't ignore those. So, and the market rejected right here at this point. You could see this. Yeah, it rejected right at that point. Yeah. If this breaks above this high impulsively, that's very positive, constructive for your trade. If it continues to chew around here, then you might have to sit on your hands for a little bit, because then it might form a corrective structure and then decide which side's going to win out. So yeah. Okay, that's my thoughts on that. But nice entry, very nice entry on this one here. YSSGC. What is your view on this? You would be only able to identify market conditions once it happened. What is your view on this? You would be only able to identify market conditions once it happened. The key to successful trades in addition, if you wait to trade once a trend or range has occurred. I don't understand your question, YSSJC. I'm not sure what you're understanding. Price action helps you to understand transitions, momentum, changes in structure, potential changes in structure. It's not just after the fact, it's before the fact. All of my trading decisions, I have the same right edge of the chart as you do. I have the exact same right edge of the chart as you do. I have the same right edge of the chart right now as you do. When I made my last trade on here, this was my chart. When I took the trade and went long on DKNG, that was my chart. I was anticipating things ahead of time, and I was right. I have hundreds and hundreds of examples of this where I have the same right edge of the chart as you do. So I'm not really sure I understand your question, but I'm making anticipation and reads and predictions in the markets all the time. Like my trade count right now is on average, my average trade count for the last few months has been 60 to 70 trades per month. 60 to 70 per month. And that's not even like super aggressive. And that average, I would say it's even low, because I had vacation, a week and a half vacation, July for my birthday. In California, we've had the fires. I don't know if you've seen the news. We had the fires. I had like a week I had to take off in August to help do fire clearance around our house, because we have, like 35 acres. It's a lot of land, a lot of forest around us. Then I had to take another like week and a half off in September. So like you could see my volume drops off, but then it picks back up. So I've been averaging 70 trades, and that's with about a week off in August and in September. I'm making tons of trades. I'm not sure what you're talking about anticipating or deciding after the fact. I'm deciding before the fact, making trades and making money. So I don't understand your question. Maybe you can rephrase and help me understand. What's your view on using volume in Forex? Not very useful, because it's not centralized. It's localized version of volume. So it's just the broker volume. The broker volume is going to be a very small piece of the pie. It's not going to be reflective of the overall market. Volume in Forex, not very useful, because it's decentralized market. Volume in stocks, absolutely necessary. Absolutely necessary. Loze. So the rules are, if you want me to do analysis on something, instrument, time frame, one sentence description, bullish or bearish. If you have a trade on it, you have to share the details on that. We are coming towards the end of this, so if you can get that out in the next 10, 15 seconds, down with that. I can do it. Otherwise, I got to wrap this up. I got to get some breakfast before I do my next webinar at 8 o'clock for our private members. So if you can roll it out fast, I'll do some quick analysis on it. If not, then we will have to wait till the next time. Where is my... Yeah. Thanks, Sir Chris. Do you journal that 60 trades manually or use a third-party site like MyFXBook? No, I trade with Thinkorswim. It doesn't work with MyFXBook. I do TradingView, traderviewvue.com. So it's super simple. I just basically do an account statement, download it, download the account statement for my platform, upload it into TradingView. It does all the stats for me. Does it all for me. So yes. Journaling manually would be a pain in the ass. It'd be waste a lot of time and be very inefficient. So yeah, there's tons of sites that do that these days. Okay, Constantine got his trade in time. NG. Do you want the continuous or you want the continuous? Okay, we'll go continuous. 1.9. Did I get the right one? Yes, no? Constantine? Let me know if I did or did not. If I didn't. What stat do I look at in journal? I look at all my stats. It's a very broad question. Maybe I'll do a journal video later. I have an article on journal, like building a trading journal, but that's such a broad question. There's so many stats. Yeah, isn't that what I have? Henry Hub? Yeah, Henry Hub natural gas futures. Yeah. That's what I got. So Henry Hub natural gas futures. What am I missing here? Okay. Okay. Are you bullish, bearish? What's your analysis on this before I do mine? Gotta hurry, man, because I need to get some breakfast in before my webinar. All right, I'll just roll with this. I was looking. Okay. Let me go to the weekly on this. Let me step out of weekly. Okay, good volume bounce off the lows. So, okay. And I want to mark this here. So you have a pretty big zone of support. Overall, the pressure is to the downside. You can continue to see it. You know, there's still continued pressure to the downside. But you have a pretty decent zone of support between 1908 and you can go to the low of this 142. It's not a bad buy zone. That's not a bad buy zone. I wouldn't mind being long here on this one here. Might be a good option play. I'd be interested to see what the implied volatility is on natural gas. I'm generally not a natural gas trader myself. I rarely trade petroleum products. So gas and oil are generally not my thing. I prefer precious metals and commodities, but yeah. But I like the zone of support here. And the fact that you have a nice high volume on the breakout off the lows, very constructive. Pullback goes to now a higher level of support, which is also constructive. And you have a 2-candle bounce, which erases all of the 3-candle losses. So this looks like it's wanting to build a little bit. There is a rejection here. Let me go to a smaller time frame. Let's go to 4-hour. Yeah. Looks like it wants to build a little bit. I mean, it's going to need to clear this right here. It needs to clear VWAP. It needs to clear 259. I think if it does that, that's going to start to put pressure on this. And if you clear that, then I think you have a very constructive base in place, because you look at the base: impulsive, corrective, impulsive, little bit gap, downside rejection. So dips are being bought. All these dips are being bought and it's wanting to pressure. If you look at the impulsive here, impulsive corrective bounce, impulsive sell-off, but it fails to make new lows, false break. So it looks like it's wanting to build. Plus, we're also going into winter soon. You know, we're coming into fall. And so natural gas prices, in my opinion, should probably increase. Obviously, depends on what kind of winter we have. But yes, so that's kind of what I was thinking. You suspect it goes to 1.9. That's certainly a possibility. Short term is favorable to the upside, and the zone is very, very strong. I think this is a very good zone to be buying. I like this zone a lot. I might even set an alert. I haven't traded natural gas in a long time, but I like this zone a lot. So yeah, it seems like you're thinking the same thing. Okay, cool. Awesome. I got to wrap it up. Get some breakfast before my next webinar in 20 minutes. But I hope you guys enjoyed this session. If you're not already signed up, we have a free trading school that we've just created. So you can sign up. It has all kinds of material in there. You can just go to the website, secondskiesforex.com, and you can see it. Sign up for the free trading school right here. All kinds of ebooks on day trading, price action context. We have a free ebooks on intro to option trading. We have intro to forex course. We're building an intro to stock trading course. We're building. We have kind of an intro to options already in the ebook. We'll eventually build out some video content for that. But it's got all kinds of stuff on trading psychology, price action, you know, things like that. So sign up. I'm no longer sending out newsletters. I'm only sending out content to my YouTube channel and to people who are signed up in the free school. So make sure you sign up for that. We're also going to be adding some exclusive content that we won't be publishing on YouTube or on the site anywhere. So definitely sign up for that. Other than that, if you'd like to learn more, check us out at our website, secondskiesforex.com, and you have our YouTube channel. So that's pretty much it. Make sure you give this thing, if you enjoyed this, give this a thumbs up. If you liked it, we really appreciate it. It helps us out with the YouTube algorithm. And thank you all for being a part of this. I hope you enjoyed this. I'll be doing one probably in a couple weeks from now. On Friday, we also have Tuesday pre-market analysis for the US stock market session. So I hope to see you for that. Other than that, have a great trading week. It's a new month. We just started a new month a couple days ago. So it's a new month. I hope you guys had a great September. September was our biggest month of the year, our most profitable month of the year. I think we even almost, because we've had April, May, June, July, August, September, all profitable months. I think September was like 40% higher than our prior most profitable month. So it's just a gangbusters month for us. We'll be sharing results at the end of the year, so keep an eye out for that. But other than that, I hope you guys have had a great September, and October is going to be a wild month. So be prepared. Expect a lot of different oscillations. So be prepared for volatility. Expect volatility through October, November, possibly through December. It's going to be a wild end to the year. So good luck trading, and I will see you guys next time. Take care, everyone.